If you're not paying attention to liquidity, you're missing out on one of the most important parts of trading. Liquidity is what moves the markets. And if you know how to find it, you will know exactly where price is likely to go. Here's what I mean. Liquidity can be found at previous highs and previous lows. We have buy side liquidity, which is the highs, and sell side liquidity, which is all the lows. These liquidity zones are places where people have placed their stop losses or even put pending orders. Price will target these areas to take people out of their trades to generate liquidity for the big people, the market makers and the banks to get into their big positions. Let me show you how I use liquidity. So when we take buy side liquidity, which can be equal highs or previous highs, we tend to retrace off of that. When we take buy side, we retrace down. And when we take sell side, we retrace up. It is literally as simple as that. So when we take buy side liquidity, I then look for other confluences. So I'd go to my time frame, mark out liquidity, wait for price to take liquidity on either side of an accumulation range. Then I'd look for confluences such as fair value gaps being respected, or even maybe just a candlestick pattern. And then I'd take my sell position to another form of liquidity, either sell side or buy side, depending on if I'm buying or selling. And then I just let that trade play out. As you can see, it was an easy winning trade. I used liquidity here to tell me when price was going to retrace. We take buy side, which generates enough buy side liquidity for the big players to get into their massive sell positions. Then we move to the downside. I've built a free PDF guide teaching you exactly how to trade just like this. If you want it, comment liquidity and I will send you the guide right now for free. Make sure you follow so I can actually send you the DM.